The Firm, India's only show on corporate law, tax and audit matters.
A Half-Baked Companies Act, new listing regulations, tougher insider trading regulations, revised merger regulations, the Arbitration Act amended, new secretarial standards, a new code for bankruptcy, whistleblowers get unprotected, a startup listing platform about to start up, insurance FDI policy confusion, retail FDI policy status quo, FDI policy thresholds liberalized. Beware of cybercrime. The government says no privacy. Porn banned. The battle for freedom of speech. The war for net neutrality. FPIs on the mat. Mauritius tax treaty renegotiated. BEPS is here. No change to the land law. New accounting and tax accounting standards. Good news for marketing intangibles. Bye-bye tax deductions. The curious case of SpiceJet. Diageo versus Vijay Mallya. Maggie banned. Aadhaar pending in the Supreme Court. The Collegium survives. GST still waiting. Well, that was 2015. Now, what about 2016? Will it be a make or break year for India Inc.? To answer that, I have with me the CFOs of three of India's best-known companies, P. Balaji of Hindustan Unilever, V.S. Parthasarathy of M&M, and Jaimin Bhatt of Kotak Mahindra Bank. Gentlemen, to all three of you, a very warm welcome. I do want to start by focusing on the key takeaways of 2015. Jaimin, I'm going to start with you. It's been an interesting year at the bank. Sure. You've also done a mega deal, so to speak. So I'm sure that the challenges have been manifold. What will you remember 2015 for?
Of course, from our point of view, we're now the fourth largest private sector bank. That clearly has been the highlight for us for 2015.
Yeah, but besides that, when you look at the regulatory environment, the policy and legislative environment, the tax environment, sure. What will you remember 2015 for?
Oh, number of regulations. You rattled off a lot of them which came around there.
Yes.
And that's going to continue.
And which were the toughest ones to deal with? Was it the listing regulation that requires several disclosures? Was it the insider trading regulations? Was it the fact that we still have only a Half-Notified Companies Act? And then you've got this changing equation between audit committees, independent directors, CSR.
Well, if you look at each of them, let's say the Companies Act, the good thing about whether it's the Companies Act or the insider trading or whatever has been, yes, possibly there were flaws or there were wrinkles around what came out initially. But the good thing is there were people willing to listen to it, looked at representations and have ironed out, come out with a lot more clarifications. So today, if one looks at it, yes, it's much better than what it started out with.
Okay. You know, many company officials, I've spoken to Mr. Balaji, have told me that the Companies Act has changed the dynamic in boardrooms, has changed how independent directors look at their roles, maybe even made them a little uncomfortable to some extent, the liability and the responsibilities on audit committees. What would be the highlights of 2015 for you?
I think for us, from our point of view, the first time we've changed the auditor for many years. So a new auditor coming on board. And we're quite thankful that we did it last year. Because if I go and say I change the auditor and then have a new IFRS standard to comply with together, then you're going to have a bit of fun in the company. So yeah. I think we're happy that we managed to change the auditor first. So we got them on board. Now the new accounting standards get that change and off we go.
Okay.
And along with that, if you see the whole IFC, the whole element of controls, what is the role of audit committees, role of auditors, role of management. I think these are all great steps towards governance. But the only thing as a challenge as companies we face is the simultaneity of it. Because everything is happening together in a very short time frame. So I think everybody will take that little bit of time to just go up the learning curve, get prepared with it. So what it ends up in the boardroom is a lot of clarificatory discussions, saying what does the rule actually mean and what are the positions that you need to take against it. Because as Jaimin rightly put it, sometimes you do have a lack of clarity on it. For example, we started by saying all frauds have to be reported. All hell broke loose. We were saying that companies will operate in a way. And then, but of course, then the clarification came through saying, yeah, let's be pragmatic about it. So that's probably how I see the dynamics going.
I kind of think about last year in two ways. Old is giving way to the new.
Okay.
So that's broadly how I see it. You now have many new things, as if you want to talk about, Make in India, Digital India from a point of view.
Sure.
Or from a point of view of everything, what it changed, nothing is the same. Whether it's Companies Act, whether it's listing agreement, whether anything you take and say, oh, new. And if you look on a very broad basis and then turn back and look, and I knew you asked the question, so I would say thoda hai, thode ki zarurat hai, zindagi haan fir bhi khoobsurat hai. So I was just thinking, which part of the world do I want to go and live in? You know, say 7% is not so bad when the rest of the world all together is at this one. So honestly, last year was challenging in many respects, but on a macro basis, it was good. And on a personal basis, I was just thinking that when I would ever get challenged like this, my team would get challenged like this to look at all these complications coming in and still be at the top edge of governance. And I think that was something that might, it proved that the team has it in them to kind of come to the fore and do it. So that was a great thing. Okay, you asked about one question, and let me just kind of break in. Do you think that the related party transactions have done its day and done? It just now, it's a pile now, it has got, the directors have got used to it, I've got used to compiling that. But whether that is the most productive way of using our time and of having governance standards, I don't know. It's become a big, if I have 4 transactions, I know every director will go through with a tooth comb. If it is 40,000 transactions, how do they do? So there are some things which we still have to resolve. I would not say everything. We now have learned to live with it. Not everything is hunky-dory. But there are other things, like you pointed out, the independent directors. It's more fun to engage and more fun for other companies to come on.
Why are you laughing, Jaimin? Did I just hear you break into laughter?
No, it's not fun. I mean, one of the things which people talk a lot about Companies Act and getting into a different form of governance. But let's face it, this was something which was earlier enacted 50 years ago. So after 50 years, standards have changed, the world has moved on. So some of it we need to recognize that there's a need for change. What we are
how you're coping with that change is what I'm interested in.
The coping with that change, yes, one has to learn.
Would you all say that 2015 was a year of over-regulation?
I wouldn't say so, because some of these are long overdue. If you're working in an environment where you're looking to attract foreign capital, you're looking for investors, you're looking for transparency, high governance standard, it's high time these things came through. Yes, it just happened, it came together. So it just wobbled a little bit, but I think it's settled down. I don't see it. I quite am with Mr. Parthasarathy here. I think teams have taken on a lot of load, stretched themselves, but as the year ends, I think it was needed to be done. That's the way we get it done.
And in addition to all of this, I come from an industry which is absolutely regulated even otherwise.
I haven't even brought up RBI regulations.
Banking, there is this whole capital market regulation, insurance.
So are you in the camp that says maybe we are a tad over-regulated now?
No, I think if you look at these areas, world over, there's regulation which is of a heightened level, of a very different kind. So we are just getting used to it.
But would you not say that had you got the chance, then 2 regulations per year rather than all regulation year would have been more useful? So in a sense, all of them did come together and created a little bit of panic.
There are 2 types of regulations. One which is governance related. That for me is the easier one to handle, because if your intrinsic governance standards are high, you will invariably comply with it. Yes, a bit of disclosure. It doesn't touch day-to-day operations. The biggies are coming next.
That's I'm going to get to them.
Where it's all operationally intensive. GST plus IFRS together, landing together, would be operationally intensive, and organizations need to prepare for it. And both of it, absolutely the right thing to do.
Well, 2015 may have been tough, but 2016 ain't going to be any easier. GST, Indian Accounting Standards or IFRS, ICDS or tax accounting standards, buy-by deductions, the move towards a 25% corporate tax rate, a new bankruptcy code. We'll discuss all of these up next. Okay, so you all sound sanguine about 2015, maybe simply because the year is past now, and maybe the worst of the year is now a distant memory. So let's talk about 2016, right? You've already flagged off, Mr. Balaji, the fact that we will have, starting the new fiscal, a new set of accounting standards to comply with, the Indian accounting standards, which bring us closer to IFRS. We will have new tax accounting standards as well come into force at that point in time. Hopefully, through the course of 2016, we will see GST become a reality, and that will have a business supply chain strategy impact, right? So how are you gearing up for 2016?
The good part in all this is that we have enough time. Our announcements are there to say that this is going to happen. When, we don't know. broad idea. IFRS, the Ind AS piece is far more robust. We have it all buttoned down.
Yeah, and thankfully the standards were out well in advance.
Absolutely. And for example, we have had dedicated teams working on it almost 1 year now.
Yes.
Since November last year, we had teams going in to sort this out from 2014
in fact,
on.
I think yours is the only company I have seen so far put out a presentation for its
That's
investors
right. So
saying these are some of the impact areas as we shift to new accounting
That's right.
standards.
In fact, we spent about 5 hours with our investors actually taking them to the core of what Ind AS is about. So I think Ind AS part of it I'm much more comfortable
Will
because
there be a bottom line impact, at least optically?
optically there will be a bottom line. It shouldn't, value creation shouldn't make any difference at all, but since the ratios turn around, turnovers change, there will be an issue there. The GST piece is much more tricky because the rules are not yet clear.
Yeah.
I think I can see a lot of right noises coming through now saying that the 1% is not going to be there. I don't know how far, whether it's going to be there or not. At least the sound bites are getting far more positive. And I would expect, therefore, the earlier the rules come out on this, it'll be better. Where I worry about is, I don't think people have really appreciated the whole country needs to change.
Yes.
Corporates, yeah, we can be prepared for it, but I need to take responsibility for my entire extended value chain on either side.
Yeah.
And that's going to be a tricky one to actually go through. So some of the operational details of it would be challenging as you get everybody to comply with. But otherwise, again, this is absolutely the right thing for the country. Earlier we have clarity, the better.
Okay. You don't have to deal with new accounting standards as yet.
Not yet.
Not yet.
For the parent.
Yeah, but I think
RBI
RBI has already put out a note on 2018, if I remember correctly, right? But GST will have its impact on you. And from all the expert commentary I'm listening into, as I do a sectoral analysis of the impact of GST, the first couple of years are going to seem inflationary. Because if the standard rate is at 18% and a lot of services that were earlier being taxed at lower rates now come in at 18% tax, consumers are going to end up paying more. That's if banks or companies pass on the cost, right? And they will at some level. So how are you preparing for GST?
There are complications around services, which let me make a simple example of a credit card. I'm an issuer, I'm headquartered here in Mumbai. You may be a customer of mine in Chennai.
Correct.
You go to Delhi and swipe a credit card.
Place of supply rules.
Where do I pay the tax?
Place of supply rules.
Now, those are things which still have to be clearer, and hopefully as we go forward, some of these things need to be ironed out. Can we have a situation where today it's very simple, I'm paying everything in one place in the country, and then I don't have set off problems and whatnot. So how does one deal with a lot of these things which are coming around? So areas where you're not into manufacturing, you don't have depots all around, these are issues which one needs to be looking at, and those are operational challenges which not only us, how do I deal with all the people who are supplying to me and whatnot. So that's going to be another massive exercise which one will need to go through.
Mr. Parthasarathy, you were sounding very sanguine about 2015.
Yeah, so 2016 is not going to be so sanguine looking forward, but very optimistic. So finally I'm happy Ind AS is happening because I had a team sitting for 4 years trying to prepare year after year after year, and they were kind of giving up on me saying, boss, you must be mad to keep this band. But I kept on it, and thankfully yes. So
you're really well prepared for this.
So hopefully we now have got every quarter the other IFRS results also coming in, not in terms of the full details, but moti whatever needs to be done. So well prepared. GST, there are 3 aspects. So we have a GST team going now for 1 year. Again, a cross-functional team. But what do they prepare for? Because without detail, what is the strategy you will put in place? So it's not very clear. And we're talking about different industries having different kind of issues. And within 18 industries, I don't want to be preparing a chart which runs into pages. So we're waiting what? Just 3 issues. Rules. And how would various things transition out, day one impact, and that's going to be, I keep thinking and I shudder that what's going to be day one impact, and how are we going to handle day one, what about the stocks which are left out. So these are very, very important and big issues which we will have to deal when we come closer to it. We have done role plays. And it's going to be fun.
You say that with a twinkle in your eye, almost as if you're looking forward to it. But let me put it this way: would you think, or would you say that the government could best use the time between now and the time it takes to convince the opposition to pass the constitutional amendment bill to at least start putting these draft rules out, getting opinion on it, creating that discussion and debate, so that if they can use the next 3 months to do all this, when that constitutional amendment bill passes, they can quickly then put in place all the other supporting legislation, rules, etc., making for a smoother transition for industry. More preparedness is what's required, right?
Yeah, so I would kind of think like that they should be ready with the legislation or rules, and they should, as soon as the amendment is passed, they can give out the rule, because then the state councils start getting formed, the empowered committee. The empowered committee is not going to happen over a day. It's going to take 3 to 6 months. That's good time for these discussions to emerge, so that the committee also gets input from the industry when they are finally deciding. Because many of what they're going to pass is also going to determine what the rules are.
Okay.
Yeah, so
but is there
there are different kinds of people here, because take one of the biggest guys who need to be brought on board is someone like an SAP. Because ERP platform providers need to be brought on board. Yes, an SAP is already working on it. We work closely with him. Migration to, let's say, tax INN, which is a module which SAP will make it GST compliant, is a big shift. How many of our industries are working on it? How difficult is it worth looking at? I think having this conversation way ahead of time, having groups that are working out open conversations, it's almost like it should be whatever happens in Parliament is one part of it. There is enough and more work to do outside the Parliament.
Yes.
And my sense is we are not getting as prepared for this transition as we could be.
Okay. Yeah, I have a question. None of you have complained about the rates suggested. And I'm going by the CA or Arvind Subramaniam's rates, which is a standard rate of around 18%, a low rate of 12%, and then, a demerit rate of sorts of 40%. I'm assuming that at these rates, if these do become the final rates, you all are broadly comfortable with the impact of
Depends.
GST?
For example, the big one that is, the discussions are still underway, I would expect, would be the things on essential commodities, food items. I think that will be jumping from 0 to 18 to 18, depending on where they come in.
Yeah, well, they'll probably come into the low rate, I would say.
Those are things which we are not clear as yet. I think the philosophy that you expand the base as much as possible, to include as much as possible, I think that's something which should be, I think everybody is aware of it. And the earlier we do that, the better it is for everybody.
But you're broadly comfortable with this 12 and 18 architecture?
There are two kinds of businesses I run. If I look at my home and personal care business, yes, I think it's a good start conversation. But with the foods business, I think I'm worried.
You are worried?
A lot of services which we put out today is subject to service tax at 14%. I think mentally everybody was talking about that 14 going to 16. So for me, it's that 16 going to 18. So it's not completely way off.
Okay.
So
manageable.
That's manageable.
So again, like what Balaji said, many different forms will give different. Tractors, it is today 0. Yeah. So I mean, let's take input cost as a tax. So it's about 6-7%. So now what is going to be the new rate? And reeling rural consumer, some more tax on him. Either way, burden is going to be. So timing wise, and what inflation. So automobile depends on what the rates come out. So various points. So I'm just saying, let's not overreact. There is a rate given. Let's get to the specifics.
But
then
are those rates, those proposed rates, okay with you, or are you suggesting that they should be even lower?
The way I look on a broader level is that the net neutrality rate is very close to the rate proposed. So I don't know what else to propose to. So I'm just saying, if those are the rate, but that is going to be pain.
I want to add to this conversation the potential that in this budget we will see maybe the doing away of some direct tax exemptions and deductions that industry has benefited from over the last several years, along with the potential maybe lowering of headline corporate tax rate to 25%. Now, all of this will not happen at one go. It will happen probably over the next 3 to 4 years. But you'll have GST coming in. You'll have many of the exemptions on the indirect tax side going away because GST is coming in. And then you may have many of the exemptions on the direct tax side also going away, though effectively over the long term you will get a lower tax rate. I want to know what the net impact of this is going to be, not just for 2016, but over the next 2 or 3 years.
The key thing is that when you talk about corporate tax, clearly that whatever is the effective rate of tax that we get, effective rate, I'm not talking about after exemption, is not probably the most attractive in the world. It's not the highest, but it is not also the most
attractive. You're paying what, 20 to 22%?
We pay probably 24 percent, but every business is very different. So you got a range in that. So it's not very high. So if they're balancing out and keeping the same rates, I'm going to be not affected too much if both goes,
But that will probably be the net impact at the end of 3-4 years. In the interim 3-4 years,
so we'll have
never be an exact balance, right?
So that is why we have to watch the details in the next year. But your question was, at the end of the day, what is it? At the end of the day, if the net impact is that it is going to be similar than what it is, so no impact. If it's marginally higher, then the PBT will be what it is, PAT will be a little lower. So that's what the investor will get. So very simply put.
But also various inefficiencies. I think if you see the way the disallowances, inefficiencies, take dividend distribution tax versus withholding tax. I think I would probably wait for a fair amount of clarity on this before one can say which way it's going to go, because there is no clarity on which is the way it is going to come through. What we know is it seems to be 23% seems to be the rate
but which they have put out a paper. They have put out a paper suggesting the deductions that will go away.
Exactly, but what's the time phasing of it? How is it going to come through? There's a lot of engagements happening. To be absolutely fair about it, I think there's a lot of engagements happening. But if they pull it all together in a time-phased manner, then we'll be able to confirm.
What would you like to see?
A roadmap, a clarity, year-wise what's going off, and what is going to be the effective bottom line rate on that. That will be what I'd be looking for, which I'm hoping in the next budget we'll have clarity on that.
Some of these things will have to lead to simplification. So a lot of these deductions, a lot of these ambiguities, whether it's distribution tax or let's say tax on some of these things which say ESOPs or 14As or whatever, I think some of these are just causing irritants. So as corporate India, I think we're very clear that we're fine to pay tax. I think it's just very important to make sure that what is the tax, what's the simplicity about it, and what's the finality to it. I think this whole uncertainty about litigation, about fighting in terms of what is the uncertainty, how long will it drag around in terms of what will I have to pay, when will I be called upon to pay additional ones. I think if that gets clarified, and there will be some interim pain as we go through that process, but ultimately one will need to take away a lot of these, whether it's exemptions or some of these other irritants, and make it simple.
Okay, so I've spoken to other CFOs, especially from the pharmaceutical industry, from the infrastructure industry. They sound very pained by the possible going away of these exemptions. So I just want to point out to our viewers that the opinion is very divided. Not everybody feels so gleeful about a simplified tax system.
No,
okay?
I'm also not gleeful, and I'll tell you why. See, India is as a manufacturing entity coming towards the world, and R&D is a very important investment. So you take away, it's simple. It makes everybody similar. But whether India needs for Make in India, the kind of R&D inputs, because you can't do it without products in India, it can't be made in India. So there are complications about it. But as a corporate citizen, we all look to government and say, if there is pain and the larger gain, then we will all be game for it. Yeah, but we have to recognize what is the pain and what is the
larger gain.
Yeah, what is the larger gain?
Well, the tax, regulatory, legislative and policy environment is one challenge. But what about the macroeconomic challenge? Will 2016 be any better than 2015? We'll discuss that right after this break. I want you to give me a sense of when you look at the regulatory, legislative, policy environment, okay, and then you marry that to what your expectations are from the macroeconomic environment, what is 2016 looking like for you? Are we going to see a pickup in the economy this year? Are things going to be better than 2015? Is private investment coming back? Is consumer demand picking up?
Overall, if you look at it, that's a lot more positive. If I look at the fact that there are lots of things going for the country, whether it is the fiscal deficit, led of course by the fact that overall globally the commodity prices have slowed down, oil is helping us in no uncertain terms, and to that extent, I think it's for us to make it happen from here.
Will 2016 be better than 2015?
Yes. I mean, if you have a clear answer, yes, the direction is very clearly there. Whether it's going to be better than 2015 certainly looks like it. I don't expect it to be a leapfrog to say that, well, will it catapult us to a different league? I think we need to recognize that the world over, things are not great. And to that extent, we will do far better than what the world is doing. Certainly looks like better than 2015. On the hope of some of the things happening, some of the reforms happening. We've had 2 bad monsoons coming in. Hopefully that should be doing better. But overall, if I look at the hope of 2016, certainly better than 2015.
Is consumer demand picking up, Mr. Balaji?
So I think for me this is more about building momentum. It's not so much about what's the velocity at which you take off, because the business is building momentum. The markets are building momentum. And as more optimism kicks into the air, consumer confidence picks up, and then you see translating into demand, and then off you see performance of companies picking up. And in that, I think the fact that you have low inflation is a very good starting point. Stable currency, fantastic starting point. And with that, when you see the investment cycle also starting to kick in, it's a matter of time before these things start building in. So companies like us, we position not for a year, or we position for the medium long term. And if I look at it just from an FMCG perspective, look at your penetration levels of commodities, look at your consumptions of various companies.
Mr. Balaji, I'm not asking you for guidance for the next
No. All I'm saying is all that.
I'm saying, will it look better? Is it looking better?
Has to be. If you
Has
see,
to be.
Has to be. It is building momentum.
Considerable momentum? Incremental momentum?
We'll have to see. Let's see how the things play out.
Well evaded. Nicely evaded. Mr. Parthasarathy, are you going to sell more cars, tractors, holidays,
yes, that's
finance in 2016?
Everything is yes.
Everything is yes?
Because this 2016 I would put as a year of hope. We've done all things right so far. I think the momentum is what is lacking. So as the infrastructure
Mr.
investment...
Balaji is saying it's a year of momentum. You're saying momentum is lacking.
No,
I like the CFO language here. How not to tell you what's going to happen this year?
So I think we're both saying similar things. I wouldn't say the same thing, because then I'll be putting words into his mouth. But what I'm saying is that 2015 lacked that momentum. So now that what we are waiting for is that momentum to kickstart. So if anything, I would say that if it's not a make or break year, it's a make or bigger make year. So how much will it be? Faster growth is what we have to see. Just divide into two parts: India versus Bharat, just to put it simplistically, rural and non-rural. So the rural is struggling, and it will take some momentum for it to come through. So some of the trickle effects which happen on an infrastructure project starts. How far, how fast is what we have to see, but there will be momentum. But what is a good thing is that the base effect has already happened. So we're talking from a lower base next year.
Sure.
So that should be, from a point of view, at least stable, if not positive. Okay. And when the kick-in starts, it should be positive. Of course, monsoon is a great evener, so we'll wait for it. And the urban, it's starting to take, things are starting to come around. All the things that we have done right, whether it is Make in India, Skill in India, Digital in India, Jam Trinity, all of them should start to make some impact.
All right, these are all traditional challenges that CFOs have faced over the years. But the role of CFOs is itself changing as technology disrupts business models, and we'll talk about that changing role right after this break. I do want to talk about the changing role of CFOs and therefore all of your lives in 2016. How much of your time did you spend last year on compliance, on dealing with Companies Act, insider trading regulations, listing agreement, and how much worse is it going to get in 2016 as you deal with IFRS, GST, tax accounting standards, deductions going away?
See, as a role of a CFO, you will anyway have two parts of the role. There's one around the stewardship part, where all this fits in. And that, I would say, in the early part of the year was on the very high side, because you tried to get a handle on this. And by the time the middle of the year came in, we were comfortable. I didn't see much time getting spent there. But the business partnering side, the other part of the role, is pretty active, because with this kind of volatility in the markets, commodity markets, getting pricing right, ensuring that your brands are well positioned there and monies are getting deployed into them is almost a full-time job that ran for a while. And if I look at 16, I think we also need to add to the mix. Volatility is going to remain. Nothing is going to change. That is going to be as volatile. Compliance, GST, Ind AS, I would say it's more stable. GST will just need to be watching out for it. But we shouldn't forget technology, talent. These are also equally big spaces which will start drawing your time into. Talent always takes time in, but I think with the way technology is changing, with the way digital is coming in, be it digital marketing, be it big data, analytics, there's a hell of a lot of area which require strategic thinking. It is not just operational. And I think the earlier we are able to get a handle on this part of it and nail it, as far as the volatility, brand support, all that, I would assume will move on to, you should have mastered it and therefore it runs on autopilot. This is a space where we need to start engaging, because this can change the future of companies. It can radically alter what future looks like. So I think I'm very, very keen that we stop looking at just 1 year and start looking at 3 years. You'll suddenly realize GST Ind AS is not my concern area. That will get nailed. This part of it is that could be risks to business models itself that will start emerging if you don't address it today.
So what if you were to tell me at Hindustan Unilever what exemplifies
the impact of these forces on your business and how your business will adapt over the next 2 or 3 years?
Take the area. Let me give you one example.
Yeah.
Spends that we do. We are one of the highest spenders on TV.
Yeah.
Some years back, we used to be spending about 90% of our money on TV.
Yeah.
Now I spend only 70%.
30% is digital and
is
print.
moved out.
Yeah.
Moved out. This will keep moving on in this direction, because as you suddenly realize your ways to engage with the consumer is very, very different, and your ability to therefore have new brands, new offerings is completely different. You need different portfolios for this. So I think there is a digital capability piece, there's a digital analytics piece, and there's a portfolio piece. All have to be done with today, because that industry is moving at speeds where we need to catch up with that speed. It's a very high moving.
Are you on Twitter, Mr. Balaji?
Of course.
You are?
Yeah.
So you want to advertise your Twitter handle to all of us so that we can follow you? No, I know Partha is on Twitter. So.
That's for me and my family. It's not a publication.
No, I'm curious, because you also have to, all of you, personally equip yourselves to deal with this changing world, right?
If I want to communicate with my daughter, calling her doesn't work.
Communicate with your consumers.
No, I'm just talking about how personal it is.
Yeah.
You want to get through to her, put it on Facebook Messenger, chances of hitting her is immediate. Instantaneous. So that's the level to which things have changed. So same with consumers. For example, let's say when you did the Lakme Fashion Week, we almost had to have a full-fledged social media a nerve center which was trying to track how audiences are moving, and how do you ensure that you give them the feed that they want. There's a look that's on the stage. How do you decode the look, and how do I actually help them? Digital gives you consumer engagement platforms at a scale that has never been seen before, and we're very excited about it, but man, we need to learn it, and we need to really...
So personally, what do you find most challenging about learning it? I'm very curious about that. About learning to deal with this new world. What do you personally find most challenging?
I think it's mindsets, speed, comprehension of how fast something can move. I think we're all used to linear speeds. When it moves to exponential speed, I think we just don't get it. Human brain is not wired to do exponential.
At least not after a certain generation.
I'm sure it is. I consider myself on this side of the generation, the wrong side of the generation.
After a certain generation, yeah.
So let me just pick up on a couple of things which you said to build on. First is if you talk about how do you look at it as a CFO, and what about CFOs? I think the biggest thing is to say you have to unlearn and relearn. Everything what in the past was okay, or known, or you are the functional expert is no more the case. Second thing is every business is changing. Slowly, some of them slowly, others more fast. But everybody is changing. So you're going to learn more from startup CFOs. Then you're going to you got more to learn from them than to teach them. So the first thing is I'm telling all my CFOs, hey, learn more from the startup CFOs, otherwise we'll be not be in the game for long.
Redundant, yeah.
And the second is in terms of virtues. And there's a very interesting analogy. I said, what's the virtue of a new CFO? I said it's going to be 5-star CFO.
5-star?
Yeah, so our 5.0 version. 1.0 was the bean counter, 3.0 was the business partner, 5.0 is the value creator. And how is he creating that value? Is because the new world is ice. Climate change on one end and experiential commerce at the other end is going to change every company's business model sooner or later, but it's going to change. Yeah. So innovation and adaptability to C&D, manage C&D is going to be the future. So how is the CFO got to change? So he's got to first at least have failed at something. If he's not failed, then is he going to be able to handle the future? It's going to be a very different world. So I'm kind of advocating to each of them that
actively fail. Actively fail.
No, at least stumble and learn, and learn from the startup CFOs, because they've been habituated to the business failing, something failing, and they learn and adapt very quickly.
A lot of technology changes which are happening. How do you adapt that? Business changes which are happening. How do you contribute?
How do you contribute so there? Dramatically.
So let's take some of these stuff which are earlier. 5 years ago, even 2 years ago, one would have looked at setting up new branches as the number of branches was signifying how large you are.
Now all of that.
As I go forward, do I need real branches? How many times have you visited a branch? Possibly not.
Yeah, for the last 6 months, 8 months, I think never.
To that extent, how does one slow down the pace of growing branches? Because again, that is a cost which you are looking at. And how does one deal with servicing the consumers on a different wicket? You also have other digital players coming in and getting into new products.
Payment
so how
banks.
do you deal with them? Payment banks, for example.
Yeah.
They may take away some of the businesses which you are doing. Say, for example, transactions, moving money from one to the other. So are you going to be competing with them? How do you maintain the trust of your customer with you? Also at the same time, your bottom line, so the fees which are going to be charging are going to be under stress.
Yes.
Across board.
Correct.
A lot of the easy money across businesses, what people were making is going to be under stress as more and more people come in.
And to that extent, instances, just to build on this, look at the magnitude. If an RBI publication calls out Bitcoin blockchain control as an area which is like a big disruption, they love it. There's a regulator who said we don't like the Bitcoin, but we like the technology for it. Fascinating. I would never have imagined a few years back. That's one. Take the price of solar power sold to Orissa government, 4.3. That's cheaper than what you're getting on the grid. This is monstrous disruption. These are not small things. And if as CFOs, if we do not see that, because somebody has to see 3 years out, else life becomes only a 2016 conversation. I think we are into some seriously exciting times where we need to, as you rightly put it, unlearn, relearn, scrap stuff that's not relevant to you, but really hook on to the bandwagon. There are some winds blowing. If you don't unfurl your sails, you're not going to go anywhere.
Tell me, I know this sounds like a popish question, but I'm going to ask it anyways. What did you do in 2015? One thing that you did, then you were surprised at yourself, but it was a response to the changing environment. One thing that you didn't think you'd ever have to do as a CFO, or was never required as part of your skill set in the previous years. Digital advertising is now, fairly talked about, so we understand that. Or whether it's online banking or the consumer experience. Something novel that you did in 2015 that surprised you as well.
See, if I look at the finance function as such, I think for us to suddenly turn around on e-commerce and then say, actually, the way you need to evaluate credit for them is very different compared to what you do in normal trade. That took us by surprise. And
so what did you do?
Our entire evaluation of it, how do you take decisions on this on the fly, how do you resource up well ahead of time, those were new things where we had to actually throw people at it and saying, let's see how it goes, and then start by saying, don't give an annual plan, just start looking at it month on month. But we are a company that we always believe in year-on-year growth. And suddenly realizing, no, forget year-on-year, I want to look at sequential. And no, not sequential quarter-on-quarter, I want to do month-on-month. Then you suddenly realize you wire up very, very differently.
Jaimin, I want a non-traditional experience.
Broadly, to try and make sure that the teams which you're working with is equipped across board. I think you had to break mindsets of people to say, look, I'm a tax expert, or I'm an accounting expert, or I'm doing just secretarial work.
Still traditional.
Just make sure. That's one. The other one is to make sure that you use technology to do a lot more analytic work than what you are doing just a pure accounting. And that's something one needs to get into a situation in which one has initiated things to make sure that you are then looking at more business support than just a pure role of... And how are you going to be seeing trends and helping out what's happening in the business?
I've got 3 mentors and all of them are under 30. So.
Oh, that is non-traditional. That's lovely. All right, to sum it up, the key opportunities and challenges of 2016 and what to expect from the budget. I'll put that to my guests right after this break. Last question. Key opportunities, a short, brief list, point-wise, of key opportunities and challenges that 2016 will bring up. And since I cannot run away from what the budget will bring up in a couple of months from now, what you hope to see there? In point form will be good enough.
I think opportunities is what we saw all along. That's a consumer opportunity is phenomenal here. Don't see a difference there. Low inflation, great opportunity. Stable rupee, great opportunity. Clarity in how future is looking like in terms of this is how tax will move, this is what GST will come, it's a matter of time, but this is what we can mentally prepare for. Great stuff. So I think my mind, as from an FMCG perspective, regulation is not the big one for us.
It isn't, so I haven't stressed as much.
But for me, the consumer story is starting to really come together once again. That for me is a great opportunity.
Okay, challenges and budget expectations?
Challenges for me, I think, is simultaneity of these implementation of some of the changes that are coming through. And particularly on GST, I really do worry about the lack of clarity on the operational side. As much as the strategic conversation we can still have, but let's get this one out of the way would be my...
so would it be fair to say that in the budget then you hope you will see clarity on all these things? Yes. At least a roadmap of...
maybe GST may not be coming in the budget, but as far as the budget itself is concerned, as long as it is continuity with change and simplifying some of the more complex areas of compliance, as you rightly put it, across the board. We have GST, but you still have C-forms. can we really get over some of these things and brutally simplify the country? I think we'll be really fascinating.
Okay, one quick question on the budget. Would you like to see the government maybe delay fiscal targets by a bit to be able to continue pump-starting the economy or pump-priming the economy?
Personally speaking, I think there is discipline and growth. You cannot be indisciplined and grow. I think we will lose the credibility that we have won. We have taken a lot of time to get to this credibility. I don't think we should ever let that go.
Same questions to you, Mr. Parthasarathy.
So next year, 2016 is I think, if I were to kind of phrase it, it is a year for implementation and co-creating. Okay. And that's what I think the entire economy, the corporate, the government, all have to kind of do. Whatever you have done last year, implement that much more. And I think it's not a question of new investment, but whatever has been said, how can that bring to fruition in this year? All the contracts that have been given. So that's a big. So I see that as a big opportunity. The challenge I see is how fast can we revive rural market. Okay. Yeah, and a balanced growth approach is not to lose discipline. It's not going from 0 to 100, but how can we kickstart that? We have the tailwind of fuel and commodity price. We cannot blame later something else if we don't kickstart it in 2016. So that's the big challenge.
No, okay. So one second. Are you saying that you're okay if they defer fiscal responsibility requirements, fiscal targets by a bit to be able to put more money to work as public investment?
So I'm saying that the amount of money that they are getting because of fuel being lower and commodity being lower needs to go into investments, not just to...
But that shift we've seen a little bit in 2015
discipline, suppose the fuel cost goes up, what happens to fiscal discipline? So I'm just saying there is a balancing act here. I'm not saying one or the other. And I think there is some bit for, I'm going to watch for saying rural economic kickstart is a big priority in 2016 for everybody.
Whatever it takes.
Yeah, whatever it takes.
Whatever it takes. Okay, that's the bottom line. Jaimin?
From an opportunity point of view, both individually for the company as well as for the economy as a whole, I think as the economy as a whole, we couldn't be placed better. I think it's for us now to make it happen. And execution is going to be the key. If you look at the government, a lot more intent has been talked about, a lot more policies have been talked about. I think 2016 is going to be a year to make it happen, to execute it and make sure that we get the results of that. I think even if we just get that without any big bang new things coming in, there'll be a lot to be achieved. And that's, I think, something which we've been lacking around. Okay. So we just have to make sure that a lot of that is translated into action right now.
So that's your opportunity and
that's the opportunity and in a way challenge, because execution has not necessarily been our strength as a country.
Budget?
Budget, yes, I would actually look for not just the 1 year, but a roadmap in terms of simplifying things and making sure that, this is what the ease of doing business is all about.
Okay, gentlemen, we'll leave it there. Thank you so much to all three of you for joining us here on The Firm on CNBC TV 18. I hope you have an excellent 2016, definitely better than 2015. And thank you very much for watching. We'll see you next week.
The Firm, India's only show on corporate law, tax and audit matters.